Imagine a product so profitable that it doesn't just make billionaires richer, it keeps entire governments dependent on it. A product so dangerous that countries willingly enslave themselves to it, generation after generation. Yet, most people don't even realize it exists. What if I told you that this product isn't gold, isn't oil, it's debt? Global debt, the invisible engine of modern finance, has quietly become the most profitable commodity in history. But how did this happen, and why are we still trapped in its cycle today? The story begins long before the first modern banknote was printed. To understand global debt, we need to go back to the 1600s. Europe was hungry for capital wars, colonies, and trade demanded more money than any king could mint. Enter the first central banks, the Bank of England in 1694, followed by others across Europe. These institutions didn't just store money, they created it. And here's the twist, they didn't need gold to do it. They could lend money to governments, charging interest, and the state would pay it back by taxing its citizens. In other words, governments became clients of a system that profited off perpetual borrowing. By the 19th century, this model had evolved. Governments financed wars, railroads, and empires through bonds essentially sold to private investors. And here's the secret sauce. The more debt a government issued, the more profitable the system became. This wasn't accidental, it was by design. The origins of global debt as a commodity lie in conflict. Take the Napoleonic Wars. European nations borrowed heavily to fund armies, leading to massive national debts, but those debts became tradable instruments. Investors could now profit simply by holding government IOS. Fast forward to the U.S. Civil War, where both the Union and Confederacy relied on bond markets to fund the war. Wealthy financiers, some of them names you would recognize today, saw not just opportunity, but guaranteed profit. Debt was no longer just a tool, it became a product with predictable returns. And because governments needed it to survive, demand was effectively infinite. A cruel paradox emerged. The more a nation struggled, the more profitable its debt became for those who controlled the system. By the 20th century, global debt exploded in scale. The First World War left Europe in ruins, and governments relied on loans from foreign banks. The 1920s saw a debt-fueled boom, followed by the collapse of 1929. Yet, even in the crash, debt didn't vanish, it transformed. Governments issued new bonds, central banks intervened, and investors found ways to profit from the chaos. Then came World War II. The United States, with the newly powerful Federal Reserve System, borrowed trillions by today's standards to finance the war effort. Bonds were sold to citizens, banks, and foreign governments. Every dollar borrowed wasn't just spent on tanks and planes, it generated profits for financiers who understood the system. After the war, debt didn't disappear, it became the foundation of modern economies, funding infrastructure, education, and industry. But the real genius or danger was yet to come. The system that worked for centuries eventually reached its breaking point. By the 1970s, the U.S. abandoned the gold standard. Money was no longer tied to a physical commodity, it became purely credit. Governments could now borrow almost endlessly, and investors continued to profit. But this unleashed instability. In Latin America during the 1980s, countries like Mexico and Argentina borrowed billions to fund growth, only to collapse under interest payments. Western banks, meanwhile, had already sold off much of this debt as tradable instruments, collecting profits at every step. The paradox of global debt became clear. The system thrives when borrowers are vulnerable, and vulnerability is profitable. This pattern would repeat again and again. The 2008 financial crisis was a perfect storm, and yet a predictable one. Banks had packaged mortgages into complex derivatives, selling the risk of default as a product. Governments had borrowed to bail out banks, creating a new wave of debt. Investors who understood the system profited massively, while ordinary citizens bore the consequences: foreclosures, unemployment, and austerity. Efforts to fix the system, quantitative easing, debt forgiveness programs, and austerity measures have failed repeatedly. Why? Because the profit motive is baked into the system itself. Debt is only valuable if someone owes it. Every bailout, every stimulus, every loan reentrenches the system and rewards those who supply capital rather than those who produce it. Today, the numbers are staggering. Global debt exceeds $300 trillion, a sum larger than the world's annual GDP. Corporations, governments, even households are all entangled in this web. Meanwhile, interest rates, derivatives, and bond markets continue to create profits for a small group of financial players. The cycle repeats. Economic stress leads to borrowing. Borrowing leads to profit for lenders, and governments scramble to manage crises without disrupting the profit flow. Even in emerging technologies like crypto lending or sovereign wealth management, this pattern repeats. The product hasn't changed, only the packaging has. Debt remains the most predictable, most profitable, and most socially disruptive commodity in history. Debt is not just a tool, it's a product designed for perpetual profit, often at the expense of those who produce real value. Financial crises aren't failures of the system, they are its business model. Understanding debt's mechanics is no longer optional. It's essential for survival in a world where money is created as credit, not value. The question isn't whether global debt will continue, it will. The real question is whether we can restructure our societies so that borrowing doesn't enrich a few while enslaving the many. Because as long as debt remains the most profitable product in history, the cycle will continue, and history will keep repeating itself. If you want to see how these financial patterns shape your everyday life and how you can protect yourself in a debt-driven world, subscribe and hit the notification bell. We break down complex finance, history, and economics so you can understand the invisible forces shaping our future. Don't just watch, learn.